everybody. Welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, nothing here is investment advice. Do your own due diligence. Today is December 9th, 2025, and my guest is the CEO of Lifezone Metals, a company committed to delivering cleaner and more responsible metals production and recycling through the application of their hydromet technology. We're going to be diving into the company as well as the nickel market, which is the main metal that Lifezone is involved with. It's Chris Showalter. Great to have you on the show.
Great, Jesse. Real pleasure to be here. So thanks for your time.
Absolutely. Let's kick things off with an overview of the nickel market from a kind of 30,000 foot view. Why is the nickel market an area that investors in the commodities space should be paying attention to right now, in your view?
Sure. So I think just to start, nickel is notoriously one of the most volatile base metals. And I think what you're seeing right now is you have a whole bunch of different commodities going in different directions. You're seeing, precious metals, gold, silver go on really historic runs. You're seeing nickel kind of hit, relatively not all-time lows, but really being dramatically impacted by the control from Indonesia and China. So what you're seeing right now from our standpoint is you're seeing gold and silver in a run that we're starting to see people starting to look for, okay, what's the next commodity that's kind of been bottoming out, going through its kind of supply-demand structural kind of, fix. I mean, you've seen that in platinum. I think a good example is platinum and palladium, where you've seen a lot of mines shut down. You've seen closures due to prices falling off, and it's kind of worked through that cycle. And you're seeing a lot of that in nickel right now. However, nickel is very, very tightly controlled by Indonesia and the Chinese. So roughly, I think this year it's around 62% of the market share is controlled, the production side, by Indonesia, which is really controlled by the Chinese. And that is looking to hit upwards of 70% next year. So you're seeing an increasingly tightly controlled market share. And I think rare earths gets a lot of attention right now, and that's getting a lot of focus of how tightly that whole entire supply chain has been controlled. And what's very important for people to understand is it's not just in the mining side. These are processes that involve smelting, concentrating, refining. So it's a combination of all those sequence of events. And so really the downstream processing and refining is where you find the strongest chokehold. So really rare earths is a great example of where you've seen a massive concentration of that downstream processing within one country. And the nickel market, you're seeing a replication of that as well. So nickel is becoming just as acute, it already is, of a concentration risk for Western markets in terms of mineral supply chain security. So that's something where Lifezone Metals, our flagship asset, is the world famous Kabanga nickel project, which is really the largest potential nickel sulfide deposit that's really development ready. And so we've been working very hard getting it to the really production. We're kicking into the FID phase and construction. So this is the next really big source of nickel that's poised to come online that would be outside of the sphere of influence of Indonesia and China. So we become a really strategically important deposit, and that's where we're getting a lot of attention right now. But that's really how we fit into the dynamics right now in the nickel market.
Great overview, and I want to dive into both Indonesia's dominance of the nickel market as well as Lifezone Metals in a moment. But first, I want to go back to March of 2022, where nickel surged in a single day over 250%, the single most extreme single-day move in commodity history, leading the LME to suspend nickel trading for over a week. Since then, as you mentioned, the price has fallen and it's been in a sideways consolidation for around a year now. What are your thoughts on that price spike? Was that a reflection of where nickel prices could ultimately end up? And do you think we're potentially tremendously undervalued at these levels right now, if not at least moderately undervalued?
Yeah, I mean, I'd love if that was reflective of future nickel prices. I mean, that price on really on that day, I think it hit almost $100,000 per ton. I think that was a unique kind of black swan event. What we saw, and I think there's been a really good kind of triaging of looking back at what actually happened, and that was a factor of you had the Ukraine-Russian war really spooking commodity prices, and what you had was a massive concentration of short positions from one of the largest Chinese nickel players, Tsingshan. So you add that in, and you add in the fact that a lot of the way that LME works, it works best when you do a lot of the clearing through the LME clearing process. A lot of the short positions that were put on by Xingshen were done over the counter, so the OTC market. So they weren't, you couldn't track them as readily, and so people were caught off guard. And what really resulted was just a catalyzing, short squeeze where margin calls were just being automatically triggered. If you have all these OTC positions with various third-party banks, they're not acting in concert. They're all scrambling to cover those margins, those margin calls, and so you just saw a self-fulfilling event that just sent the price skyrocketing. And there's not the depth of liquidity in the LME, especially for a single commodity like nickel, that can contain that if the clearing isn't all done centrally. So you really saw a fragmented scenario where people were just caught off guard. And I think that's also, look, the LME has been criticized quite a bit, but that's something that was a very unique event and shows the concentration risk of having that much of a position put on when it's not understood and controlled within that specific platform.
Well, let's dive a little bit deeper into Indonesia's dominance of the nickel market, over 50% of the world's production. And they have implemented an export ban on raw nickel since January 2020. Maybe dive a little bit deeper in terms of the impact that has on the nickel market and why it highlights the importance of bringing other sources of production online.
Yeah, so as I indicated, it's actually higher than 50%. It's about just over 60 this year. And what's interesting is the actual, you have the production and the market share that Indonesia controls, which is around 61%, poised to go to 70 next year. But you have the consumption being dominated by China as well, and that's almost 80%. Right now, it's around 65% of the global demand for nickel is still stainless steel. Only about 15% is battery technology right now, but that is growing at a much higher rate. So you're still seeing the predominant growth in nickel really being driven by stainless steel. So I think when you look at the production overall, most of the growth will come from electric vehicles on a year-over-year growth basis, and you're seeing most of that demand come out of China. So right now you're seeing electric vehicle sales in the U.S. Really in the back of the IRA tariffs expiring. So a little bit of a spike in EV sales as people want to take advantage of the expiration of those credits, knowing prices would go up. So you've seen really a fall off in the U.S. in terms of EV sales, but you're still seeing very strong growth year over year in Europe and China. So you're really seeing a bifurcation of where the demand is really coming from. And I think what's matching up is Indonesia's been able to really dominate the sourcing of nickel to satisfy those batteries. And I mean, Indonesia, they went on a very, very concerted policy effort to increase supply. And so it was a very successful policy because they have really decided that they wanted to incubate and control that nickel industry. They brought in all the incentives to encourage investment coming into the country, and they made some very, very strong decisions to force local beneficiation, which was pretty hectic. I mean, they shut the borders pretty rapidly, but it has resulted in the evolution of the high pressure acid leaching being a phenomenally successful development in the nickel industry. And this caught everyone by surprise, especially the majors. So what you saw was the high cost producers in Western Australia. They've all, I think there's only probably one or two mines still open. So you saw the high cost producers of nickel, the nickel mines of Western Australia, just get absolutely bludgeoned by the advent and increase in supply so rapidly out of Indonesia. So Indonesia, now it comes with a very, very high environmental cost. There are not environmental controls on the mining of and the methodology in Indonesia. We can talk about that some more as well, but it's probably the dirtiest methodology for mining and processing in the mining space right now.
Very interesting. I want to talk as well about the U.S. administration's push for more critical minerals production that is from either friendly allies, domestically sourced, because they're starting to wake up to what you've been talking about, this concentration of commodities production, particularly in China when it comes to, obviously, as you mentioned, rare earths is what's in the headline these days, but a variety of critical minerals. Talk to us about how you view that. We've also got the EU, which is talking about critical raw material tariffs. It seems like countries around the world are starting to realize just how valuable it is to produce commodities, which is interesting because we've lived in this financialized world where hard assets have been very out of favor. And now the tables seem to be turning and people seem to be waking up. What are your thoughts on that, and how it could impact both your project and the nickel market as well?
Yeah, it's been fascinating to watch it kind of evolve, because what we've seen in the previous administration, you saw the advent of the Mineral Security Partnership. You saw a collaborative effort by the West to align themselves and look at supply chain security through kind of a collaborative. And that still is the case. But fast forwarding to this administration, they've taken a very unilateral approach and been very, very aggressive in some of the rollout of their policies. So they've established, really very specific supply chain security individuals within the government. And you're seeing an example of several of the transactions that have been, really announced recently. MP Materials was obviously one of the big highlight ones. That was probably a one-off because of the really urgent strategic importance of securing a rare earth project, really the only major one within the U.S. Borders. And so that was unique. But what that demonstrated, in my view, is that you're seeing a much more creative, much more fast-moving, reactionary capability within the U.S. government. There's various buckets of capital, whether it's from the Department of War, whether it's from Department of Energy, Commerce. So you're seeing a number of different buckets that are all being availed to go after some of these supply chain, high risk commodities. And so what the U.S. has done is they've expanded the list of critical metals. And really methodically, what I've seen is they're going through them one by one and trying to determine where can we back certain projects that will ensure that we are solving the supply chain risk for that specific commodity. And I think importantly for nickel, where we kind of sit in this whole entire story, as an international project, we fall really within the U.S. Development Finance Corporation as kind of one of our key partners right now within the U.S. government. So and this is public, we've engaged them on project financing for the Kabanga Nickel project. And then also more immediate is the political risk insurance application we have in with the U.S. Development Finance Corporation. That's outstanding, and that should hopefully be going before end of this year to the board for a decision. Now, what that does is that evidences that potentially we have the U.S. government coming in to really show a strong endorsement by underwriting an international project. And what they're going to require, all these buckets of capital coming from the U.S. will require offtake being directed to U.S. and allied, what they call approved partners. So in one sense, to your question, you have the Europeans, looking to craft their own policy, and whether it's the battery passport or it's what we're really seeing is you're seeing collaboration in some areas, but you're also seeing each country unilaterally looking to go after their own domestic supply chain security, whereas the U.S. is pretty much at the most aggressive stage of that. We also have an MOU with the Japanese, with JOGMEC, which is really the government parastatal that's been around for quite some time to facilitate the inputs for all the domestic Japanese industrial manufacturers. And they have a very similar mandate where they're looking to secure supply chain. They're looking to secure minerals for the Japanese economy, and they provide liquidity and equity financing in return. So very similar. So it's a dynamic, it's a fast changing landscape right now, but there is a lot of aggression out of the U.S. To support projects like Kabanga. Not only just a domestic agenda anymore, they're looking to identify these strategic projects that are overseas with countries like Tanzania that can be allied in a bilateral engagement. I think we're very much in a very positive pathway to see that come to fruition.
Well, let's talk about Lifezone Metals and the Kabanga project. Could you start by giving us an overview of the company and maybe dive deeper into the Kabanga project and discuss, infrastructure in place, milestones achieved, and plans to advance the project moving forward?
So Lifezone Metals, we're a combination of our flagship Kabanga nickel project, which we've been discussing, which is really the hallmark nickel sulfide project globally that's poised to go into production the quickest. And then combined with that, really our background and where we came from was our founders had really a hydrometallurgical background developing processes and flow sheets to crack certain difficult processing situations on typically on sulfidic or refractory ore bodies. And so what that means, it's an alternative to the pyrometallurgical smelting and burning. Hydrometallurgical processes are used within the mining industry, but what our team has done is come up with a novel approach, specifically in PGMs. That's really where we did a lot of our initial R&D. But what Lifezone's really positioned and what we're looking to focus on right now strategically is identifying where we can apply our hydromet expertise to generate a competitive advantage for some of these projects that have not been developed or that would benefit from a different processing route or engineering design. And so we're a combination of a technology company and a mining company, I guess is a very good way to put it. The big project, Kabanga, it's based in Tanzania. We finished up at DFS in July of this year. And so what we've been able to really display to the market is outside of collapsed nickel prices and the firm control of Indonesia and China, we've been able to put forward a 1.6 billion MPV project with a 23% IRR. And this comes at just about $1 billion CapEx build out. And these are numbers and economics that demonstrate that we are firmly in a position to compete against the tight control of the Indonesian market. And that's absolutely where you have to be positioned if you're going to compete and bring a new nickel mine online. Because, as I said, the nickel mines in Australia are much higher up on the cost curve. The North American nickel mines primarily are lower grade. And Kabanga benefits from being very large, very high grade, and that puts us right there at the very bottom of the cost curve. And when you look at, we could use copper equivalent. So that's a good metric people like to talk about. Kabanga, in terms of its grade, we're 2% nickel, but on a copper equivalent basis, you add in our byproducts, copper, cobalt, we're at about a 4.1% copper equivalent. So that puts us higher than Kamoa. That puts us higher than Resolution. That's at about 2.5%. So really, it's the superior grade of the Kabanga project that's so valuable. And that's why we've gotten so much interest from other strategic partners, investors, and really, the good thing is as well, we have a very strong relationship with the Tanzanian government. And so this is a project that's really blessed by the Tanzanians at the highest level. They want to see this move forward. They support it. And so we truly benefit from a partnership with the host government and then strong support from the West, specifically because this is a very strategic, important source of nickel, copper, and cobalt for this supply chain world that we're living in.
Well, a lot of people will hear Tanzania and think geopolitical risk, fairly or unfairly. It's a common reaction to projects in Africa. Of course, we saw the coup in Niger not too long ago, another coup in Benin recently. So people tend to get a little nervous when mining projects are brought up in and around Africa. Could you maybe dive a little deeper into that relationship you have with the local government, relationship with the local community, and are there any risks you see to operating in that part of the world?
To start, I think the way the world's going and the high demand we're going to see for critical metals going forward in this whole entire broader energy transition, whether it's electric vehicles or battery storage or other new uses that are still to be discovered, we're going to have to go find deposits, new deposits, and unlock some of these existing deposits in more difficult places. A lot of the biggest, easiest deposits have been discovered. So naturally, Africa, with its mineral endowment, is going to be one of the prime areas where you're going to see some of the newer, larger deposits, not only explored and identified, but also a lot of existing deposits that are there that have been known about, like Kabanga, that have not had the infrastructure to really exploit the deposit as yet. But we're also seeing really that the time has come for countries like Tanzania. Now, to your question on kind of the risk in an African jurisdiction is definitely a risk, especially for, I would say, North American investors who are not as not as used to taking on Africa risk. But that's where this application we have in with the U.S. Development Finance Corporation is critically important, because what this shows is the U.S. government saying, hey, this is a product where we can come in and underwrite the sovereign risk of this project. And by them stepping in and providing that risk product, that risk wrapper on the Kabanga nickel project, what that does is that underwrites the equity risk for institutional investors and private investors. So, so that's a de-risking element that a government like the U.S. can step in and provide, that does unlock some of the risk factors. And so that is a big endorsement, a big commitment. And that's going to be something that we're going to the board with that application, and hopefully we'll have some good news in the coming weeks.
Well, let's discuss the company's cash position. You closed a $60 million bridge loan in September and a $15 million underwritten registered direct offering last month. How much cash do you now have in total? How do you plan to put that cash to work, and how much runway does it give you?
So when we announced the DFS in July, we made a very important decision that we had exited BHP at that point in time. So we bought back 17% shareholding from BHP. And so what we decided to do is we were working with our some colleagues of ours over at Taurus Funds, and we did a $60 million bridge facility. And what that bridge facility, in terms of the liquidity, does, that's really allocated to the project level. And that gives us sufficient capital to do a lot of the execution readiness, the pre-FID work, and really bridge that period from the definitive feasibility study and exiting BHP and getting us to that next FID step. So that was very important. So between DFS and FID, for the project to progress on time and on budget, we have that facility in place specifically for that. The smaller capital raise up at Lifezone is to focus on really, because that 60 million was focused on the project, and that's us doing kind of an annual capital raise at Lifezone to cover our working capital requirements and needs. And also we have some other projects, including recycling in North America for autocatalytic converters that we're in partnership with Glencore on. It's another application of our hydromech process. So in parallel to this, in terms of capital raising and liquidity, we are running a process with Standard Chartered to bring in another strategic investor or investors or consortium into the Kabanga nickel project at the asset level. So that's roughly that equity. If we go to the DFS, we're going to be looking at roughly a 1.3 billion capital raise, just over 500 or so. That's going to be equity, with the balance project financing. So we're in a very advanced stage with Standard Chartered Bank, who are our investment bankers, and we have made public announcements that we're kind of in the final stages of that. So we're going to have a very large liquidity event at the Kabanga level. The bridge facility gets us from DFS to when we close those funds, and then we have SocGen on the project finance side appointed for the project financing, and that's gone very, very well. So there's going to be a lot of interest, just given the high cash flow that Kabanga generates. We're able to quite comfortably put in a project financing, a debt piece for the project. So these are big announcements that are coming. I think when you look at Lifezone as a story, we've got these big catalysts on the horizon. We've got the liquidity in place right now to bridge us to FID. We've been conservative in terms of all the economic assumptions into the Kabanga project, and I think what investors and what your listeners should be looking at is, a story with a tier one asset. We've got a very big catalyst on the horizon, and this is a strategic asset that's going to be very strongly supported by the West, and so that's a great story. And I think tier one assets at the bottom of a cycle where nickel is going to be correcting in the coming years, you want to be building a mine at this point in time. You don't want to be selling nickel right now. So I think timing wise, I think we'll benefit from when nickel corrects. If you read some of the research from as even Jim Lennon over at Macquarie, in terms of 2028, he would forecast nickel gets back up to around $19,000 per ton. And that works for us because of where we are on the cost curve. We're about $7,800 per ton, all in sustaining costs. So even at $15,000 nickel, we're profitable and we're below the cost curve of where the Indonesians are. And at $15,000 per ton, about 40% of them are operating at a loss. So we're kind of bouncing around the bottom here. So I think we're in a great position. So yeah, in terms of liquidity financing, we're firmly in place in terms of the 2 capital raises we just did, and we'll have big announcements coming on really the funding partners we'll have at the project, and that's going to be the biggest catalyst that we'll be announcing towards the end of this year and early next year.
Great. Well, I'll end by opening the floor to you. Is there anything we haven't yet discussed or anything you think it's important to emphasize that potential shareholders of Lifezone Metals should be focused on?
I think I did cover the big one. I think we are, if I'm an investor right now, you're looking for distressed plays where value is not properly factored into the stock price, and I think we trade a material discount to the NPV of the Kabanga project from the DFS. So I think if you combine that substantial discount, people can take a view of whether or not we're in a position to then bring in the funding, and I think people can. I think they can take a view just based on some of the announcements, the strategic partnerships we've identified, the applications and support we have from the U.S. government. So you can kind of see we're going in a certain direction. So I think we're, I can't really say much more than that right now, but I think people can take a very strong, educated view that we're probably at a point now where it's a very attractive time to get into nickel at the bottom of the cycle, and you always want to get in these tier 1 assets. And that's one of the things that one of our early investors, Rick Rule, who I think everyone knows quite well. Rick was very clear. He's like, look, I've known Kabanga. I visited the site 20 years ago. It's one of the best deposits on the planet. It's the bottom of the cycle, and this is a tier 1 asset. So his investment decision was, didn't take very long. But tier 1 assets at the bottom of the cycle, those are really hard to time. And I think we're providing investors right now an entry point exactly on that formula. So I think that's probably the last thing to kind of touch on. I think we're in a really, really good position.
Well, I'll put a link in the description below to Lifezone Metals website as well as social media so people can follow along with the company. Chris, this has been a fantastic conversation. Thank you so much for coming on the show.
Thanks, Jesse. Really appreciate it. Look forward to coming back again.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.